Could a tech titan, long counted out by many, finally be stirring from its slumber? We're talking about Intel, and a recent market move suggests investors might just be sensing a flicker of their old fire. You know, for years, the narrative around Intel often felt like watching a once-dominant champion struggle against a new generation of agile contenders. But just yesterday, we saw a small, yet significant, shift in that story. Shares of the chip-making giant Intel saw a healthy bump after financial firm Stifel raised its price target. This wasn't just a random blip. It added to a growing sense of anticipation as we inch closer to Intel's crucial second quarter earnings report. So, why the sudden optimism? Well, everyone is holding their breath, waiting for updates on Intel's long-term strategy. The real focus here isn't just about quarterly numbers. It's about their deep commitment to cutting-edge chip production. We're talking about their advanced 18A and 14A processes. Think of these like the next-generation blueprints for building a supercar engine. Getting these right, scaling them efficiently, that's absolutely critical for Intel to truly compete again at the very top of the silicon food chain, to go toe-to-toe with the likes of TSMC or Apple's in-house designs. This isn't just about making chips. It's about reshaping the very foundations of how they operate. And let's be clear, this journey hasn't been easy. Intel has aggressively pushed forward with a massive transformation, aiming to forge a leaner, faster, and more efficient company. This means making tough decisions, including significant cost-cutting and, yes, painful layoffs across operations in places like Oregon and Israel. Just a couple of weeks ago, we saw a similar sentiment when Citigroup also raised their price target, signaling that Wall Street is cautiously watching these decisive, albeit difficult, actions. Investors are clearly betting that these moves, however painful in the short term, will ultimately improve efficiency and strengthen Intel's competitive muscle in the demanding semiconductor market. Now, we also need to put this in perspective. Intel shares are famously volatile. We've seen them make more than 35 moves greater than 5% in the last year alone. So, while yesterday's bump shows the market considers this news meaningful, it certainly doesn't fundamentally redefine Intel's entire business outlook just yet. It's more like a subtle nod of approval, a recognition that the company is indeed moving in the right direction. If you've been watching Intel, you know it's been a long road. The stock is up almost 15% since the beginning of the year, which sounds great, but it's still trading over 30% below its 52-week high from last July. And if you had invested $1,000 in Intel 5 years ago, you'd be looking at just over $380 today. That's a sobering reality check, isn't it? So, the question remains, is this latest uptick just a temporary blip of optimism, or are we witnessing the quiet beginnings of Intel's true resurgence? Their upcoming earnings report will undoubtedly give us more clues. We are watching closely to see if their ambitious manufacturing plans and painful restructuring efforts truly start to bear fruit. What do you think? Is Intel finally on the right track, or do they still have a mountain to climb? Let us know your thoughts, and remember to subscribe for more deep dives into the tech world's biggest stories.